I mean, I think it's a little bit too early to kind of make that bold prediction, but I think coming out of the summer and really after Labor Day, you did see a clear-cut shift in mentality from the investment community to some degree, and it kind of feels like the Apple Epic ruling back on September 10th may have been kind of the straw that broke the camel's back. We know that Apple did a lot of heavy lifting to the major indices in late August, early September, in the face of kind of deteriorating technicals underneath the hood. And now it's kind of triggered a little bit of an avalanche of selling pressure. And I think, once again, the crowd kind of slowly but surely coming out of the summer went all in on tech. And kind of here we are. We've only had about a 5% correction off the highs. So this is the third one we've seen of that magnitude over the past 52 weeks. So nothing to be overly panicked. But I mean, I think you're crazy if you think that the tech sector isn't facing headwinds heading into year end, and whether it's, we're past peak pandemic, still elevated valuations are relatively lofty, and kind of you're seeing, pandemic tailwinds slowly but surely continue to fade in the face of difficult growth comps.
Right. I do wonder, long-term constructive tailwinds that might come into play, the ongoing reinvention of the IT office and hybrid work. When it's enterprise, obviously the consumer continues to show evidence that they're willing to spend, even though they worry about supply chain and inflation. How much of that comes into play as we get into the Q3 prints and Q4?
Yeah, I mean, it's going to be extremely interesting. We're coming out of the bulk of conference season, and at least for TMT, for the most part, it's been mostly constructive in terms of demand trends, especially for the software kind of cloud complex. But you got to look at what we've been seeing. You had another 3 or 4 warnings last night. Now, granted, they're coming more from the industrial sector. I think every airline on planet Earth has cut guidance at this point. We know, China regulatory threats are showing, no sign of really kind of slowing either. So, something to keep an eye on. We know the supply chain, issues and headaches aren't easing anytime soon. You're still seeing warnings from the automotive, OEMs about kind of shortages lingering well into 2022. So I think, at least from a tech point of view, you really want to keep an eye on what the semiconductor companies say regarding inventory build and kind of supply and demand dynamics. And then kind of just looking out like consumer tech hardware, names like Logitech, Hewlett-Packard, Dell, how they continue to be impacted by the kind of supply chain disruptions, which we know just aren't going away anytime soon, which is going to lead to kind of continued probably revenue shortfalls as well as kind of potential margin headwinds.
Yeah, Joel, with all of those headwinds in mind, which of these companies do you think are best positioned over the longer term as you look at these different sectors?
I think you hit the nail on the head. Take a step back, longer term. I mean, I still think the semis is where you want to be. I think you keep it simple. The chips have been an absolute beast over the past 3 to 4 years, and there's no reason to get off that train quite yet. We know investments from the big three, Intel, Samsung, Taiwan Semi, aren't slowing down anytime soon. China still continues to ramp up their investments as they want to become a lot less silicon dependent on the Western world. And so I view the semi-equipment names are the arms dealers for 5G, AI, and high-performance computing. And then even further down, you look at the foundries. You're continuing reports of price hikes from Taiwan Semi, UMC, and Samsung as well. And simply put, higher pricing equals higher sales and higher margins. And that's not a bad place to be at the moment in the face of all the other kind of noise that's out there in the market. And again, the stocks I want to avoid are the names, the pandemic winners that have been confessing that tailwinds are slowing. So whether it's Chewy, Peloton, Zoom, Logitech I mentioned earlier as well. So I kind of want to stick to the semis. I think they're probably the safest place to be, at least within the TMT space at the moment.